It's a break even. Don't be looking at break evens like it's a loss. I want y'all to switch that right now because I used to do that too. I used to look at it like a loss, but I realized if I take 10 break evens in a row and I ain't lost no money, and then I take one win and I win, well, that's a great day. You know what I'm saying? It's just like protecting your capital. So use break evens to your advantage, but don't do it so much to it hinders you. Because I feel like people will use break even to the point where they're not even giving they self, like, you gotta take on, I heard ICT say this, you gotta take on some measure of risk. Like, you have to. You can't trail your stops. That's why I'm so against trailing stops. Unless like price action is just trash and I know I shouldn't be trading it. That's the only time I'm trailing stops. But like, I'm so against that because he right. You do got to take on some measure of risk. Like, price should pull back at times. Like, it's just normal order flow. You should break even, but you should do break even based on the market conditions, not the pullback. Is what I'm saying. Not your P&L for your prop firm, unless you have to, because that's the rules. Like Apex, you can't go up a certain amount and then price pull back, because even if you win that trade, you still gonna lose a challenge. So, but if it ain't one of them type of situations, you should just be watching the order flow. Something I probably should have talked about is you have to watch the amount of PD arrays against you. Like, if you're this for because Vic had said this actually. So this is the number one way I know when to take break even, when to get out of trades, when to hold it to the final destination. Is, so let's say Borowski bought here, right? Let's say he bought off this fair value gap, and let's say he in profit here. So in order for me to close this trade, this got to go 3 PD arrays against me. So let's just count the PD arrays when he's in profit here, right? He's in profit up here. Let me zoom in some more. He in profit up here. So we got to count the PD arrays against us. So 1, here's a fair value gap. 2, here's a fair value gap. And this is an order block. This is 3. How many did price disrespect? It respected all of them, actually, because the bodies closed in the fair value gap or above it. But people will be exiting this trade right here off of this wick. But you only got 1, 2, 3 PD arrays. It didn't disrespect 3 PD arrays, so I'm holding this. Now, on the second, after it disrespect 2, even if this candle is live in motion, I'm going to try to wait for it to close. But if it's moving through 2, I'm watching that third one like a hawk, because as soon as it start to disrespect that, I'm probably getting out. But if it flip up like this, no, I'm staying in that. So again, let's go here. This is a fair value gap, it looks like. That's 1. Here's an order block. As soon as the body breaks that down close candle, that's 2, right? Third PD array would have to be, I guess, this order block or fair value gap. Look at price. It come down, boom, it disrespect that one. The order block is still here, right? The body high, you got the wick low, and you got this wick right here. You can even use that as a PD array. Look what this did. Did it disrespect all 3 of them? No, sir. It made it seem like it was going to, but no, sir, it did not. So I'll still be holding this trade. I wouldn't have got out. And then, boom, you going back up again. Count the PD arrays. Where they at? Okay, you got a fair value gap here. You got these 3 down close candles, a body over here, right? Put a wick on that body. Look what you got. That's 2 PD arrays, 1 and 2. Did they get disrespected here? No, but guess what? People gonna shit on themselves when it's pulled back to break even, right? But what is it really pulling back to? From swing high, swing low, right? That took this swing low. And then you got this swing high that took that swing high. This is your mini dealing range. Price pulls back to what? From this swing low to that swing high, halfway point. Pulls back to a discount fair value gap there, holds it perfectly. Order block here, 3 down close candles, holds it, trampoline effect, perfectly. I'm not closing this. I'm holding it. And then what else? See here, swing high, go down into key level, fair value gap, and then what? What y'all think that is on the lower time frame, lower than this 1 minute? Market maker buy model. Just a curl, front of Michael Jackson head. Easy work. If this is bearish, right? If this pullback is real, that got you about to shit on yourself. If this is real, when price get back to this fair value gap, what is it going to do? It's going to go from IRL to ERL, right? It's going to go down. But if it's not real, what's it going to do? It's not going to hold, and we're going to get what? So I'm just looking at whenever price staggers way down to a key level, I'm looking at the bearish PD arrays to see if they're going to still hold. If they don't, and it's in my favor, you know. And then we get up here, same thing. Count the PD arrays. One PD array, fair value gap. Two PD array here. Three down close candles. You put a trampoline, a line on that body right there. Swing it over. What you got? Trampoline effect. You see it? Are y'all seeing these order blocks? Like this is the insane precision, bro. Down close candle. What? We got a swing high, swing low. What's that? Market maker buy model. Over and over, over and over, over and over. You gotta lock in, bro. You will see this shit if you lock in. I promise you, you cannot unsee it once you see it. Down close candles don't hold. Two PD arrays do hold. I'm not closing this. Boom, boom. Easy work. Same thing here. How many PD arrays? One. There's a fair value gap here too. And then you got inversion. You got this is an order block. These three down closed candles. Put a tag on it on the body here. Drag it over. Never even made it down to it. Easy work. We have more than two candles that we're using in the middle of them as order block. It can be 10 down closed candles. I'm using all 10 as long as I know. You see how these they consecutive. Ain't no blue candles in the middle of them, or in his case white. They consecutive. See these candles right here? They're consecutive. So if it was, you can use them all like this together if you want, but it's best to just use the consecutive ones. On a higher time frame, like this whole rundown is probably a order block. The whole rundown probably is, but I'm just using the consecutive ones because we're looking at this time frame. Like these two down close candles right here. See these two down close candles? If you put a tag on this, look what you get. Nothing but order block. So when y'all see me using the same order block for the whole month, that's all I'm doing. It's like the consecutive candles. I'm putting a line on the body and I'm watching every time it tap down into it. And every time it tap down into it, I'm looking for that correlated market maker model. Just do this every time. Front of Michael Jackson head. Curl, curl, curl. See this fair value gap right here? This swing high right here? You see how I go down into the fair value gap right here and curl? It's the same fucking thing we're doing every single day for the power of three. This previous gap can be yesterday 4-hour gap in London session. It can be yesterday Asia session, yesterday New York. Price go down into it and curl every time. All right, let's go. I don't want to be in here too long. So I hope y'all getting what I'm putting down right now, because I mean it's probably going on YouTube because the precision and detail is like insane. I ain't gonna lie.